Globally, everyone is expecting another economic slowdown due to Corona, which could take us away from the state of wellness. Even before Corona, some of us used to look back to our working years and wonder where all the earnings have gone. Some of us build secondary businesses, which is expected to give another stream of income, but instead is eating away from our pie. All these situations disturb us and erode our confidence. This video aims to equip you to overcome these financial disturbances and take you to financial wellness. Financial wellness refers to a healthy financial state of mind. It's applicable equally to a blue-collar worker as well as an HNI. Financial wellness takes away worry about money or financial possession and lets you completely focus on your mission or career or calling in life. In other words, money doesn't take control over your life, but you are in control over the available money and are at peace with it. State of financial wellness also attracts more positivity to your life, as a focused mind often attracts abundance to it, ultimately bringing more money to you. Financial wellness can be better understood through the balance sheet of life concept. Our life consists of many events or incidents in day-to-day lives. Positive events such as new job or promotions, as well as negative events such as car accidents or fight with others, etc., which adds on and become either possessions such as experiences, mind maps, health, optimistic mindset, etc., or obligations such as strained relationships, haunting past, diseases or illness, etc. in our lives. Positive possessions or assets generate more positive events in our lives, and obligations or liabilities are the direct opposite. Balance sheet of life represents all assets and liabilities we have accumulated so far in life. So life events build on to our balance sheet of life. Both these tables are cyclical. Positive life events add to the asset side and vice versa. Negative events add to the liability side and vice versa. So we should focus on building on the asset side and take it as a mission which brings us wellness. Be mindful of the fact that what is positive for someone may or may not be same for someone else. So introspect yourself and find what's your definition of assets in life and wellness. Budgeting simply means to have a plan. Financial budgeting is a plan for your cash flows. Let's assume that all our available inflows are pooled together as a pie. Budgeting tells about the creation of this pie and its consumption or uses. It can be prepared at any level such as individual, family, etc. It's a replication of the balance sheet of life to the financial side of life. Normally, our mind captures most of the things that we prepare and write down. Similarly, a well-prepared and well-planned budget gives reassurance to the mind on the financial situation and conviction that we have put our funds to the best use, irrespective of how little it is or how small it is. This is also called capital allocation in the context of a company or firm. Financial budgeting also lets us focus on where to save and where to concentrate more for increasing the available pie. So budgeting helps us take control over the money we have and be at peace once the plan is in place. It brings the assurance of our financial confidence in our memory and hence is a great tool for financial wellness. Financial budget can be prepared for the individual earning members or at a family level, depending on how members want to use their money. To prepare your budget, you need to approach it similar to the balance sheet of life that we saw earlier. Take a paper and write down all your cash inflows in a typical month, such as salary, business income, professional income or rental income. It's better to do this at month level as most of these cash flows will be available at a monthly frequency. Now these inflows constitute our available pie. Next, list down all the cash outflows on the other side in three groups: mandatory expenses, investments, and then discretionary expenses. Mandatory expenses are expenses that you cannot do away with, such as living expenses, rental expense, tuition fees, etc. It must be followed by investments such as equity investments, mutual fund SIPs, PPF, loan repayments, health insurance, contingency buffer, etc., which will build your assets in the long term. And then with whatever left, you build for your discretionary expenses such as tours, movie plans, etc. This grouping is unique for everyone. For some people, a road trip once a quarter could be mandatory to refresh their energy levels, whereas for some others, the same activity might be a leisure item. For cash outflows happening on a quarterly or yearly frequency, do split the amount to month level and include in the budget. Be realistic in your numbers, else budget will fail easily. Needless to say, you cannot spend more than your total income. Budget helps you understand if your expenses are more than the income, in which case, you need to cut down and bring it at par. You shouldn't have the budget outflow side lesser than the inflow. You must have a plan for all your income. Now prepare the second table listing all your assets such as house, your stock portfolio, PPF, your account balances and so on, and the liabilities on the other side such as loans, your car, your retirement corpus, your international tours, etc., which you are building up for future. These are your reserves for future or obligations. Depending on your future plans, you can monitor the changes in assets and liabilities on a monthly or quarterly basis. Do not try to copy and match your budget to anyone else, as your financial wellness needs are unique. For some, wellness means big cash flows. For some others, it might be assets like property or gold or crypto. And for others, it could be just enough cash flow to meet their immediate needs. For some, having too much of cash to manage could be a reason for stress. Some of us invest in stocks with our available funds instead of closing loans, as that stock is more assuring for us. So introspect on what really gives you happiness and peace before you plan your budgets. What works for you should be decided just by you and not by any financial advisor. Most of the times, financial advisors push us to the route that's taken by majority and follows the market, but that need not be our wellness path. There are umpteen apps and softwares that help you with budgeting and planning. However, I prefer using a simple Excel template to keep my plans. Mainly because apps and softwares normally store your data on cloud, and I don't want my financial plans and asset details to go to any other company or hackers from the cloud. You can choose the platform based on how private and confidential you want to keep your plans. There are certain essential parts to a financial budget, which no one should avoid in ideal circumstances. Contingency buffer and health insurance are such items. Some others that I have in my plan include books, medicines, tours, etc. Plan these based on your lifestyle and aspirations. On month end, all inflow amounts will reach your accounts. Best way is to have automated outflows such as SAP, bill pay, etc. Manual transfers, if any, can be initiated as per plan. Reserves such as contingency, international tours, etc. can be converted to recurring deposits for earning additional interest as per your intended timeline. Remaining expenses might be the cash payments such as living expenses for veggies, groceries, house help, etc. In which case, you can withdraw that money at the beginning of the month and keep it in envelopes at home, separated as per purpose. Envelope idea might appear silly to you, but it is an effective tool than continuous ATM withdrawals without real understanding of where we overspend. This will let you easily keep your spending within budget. In situations where your income side is taking a hit via Paycuts, act on this budget to cut on discretionary expense first and some of the investments that can be stopped temporarily to make up the deficit. Contingency buffer shouldn't be touched unless essential. Keeping it untouched adds to your confidence. In case of job loss, the income side might considerably decline than the mandatory outflows, in which case you will have to start using contingency buffer and cut everything discretionary. So, prudently building contingency buffer during your good times is key. Normally, this buffer should at least cover expenses for 6 months or more. Hope this video on financial wellness provides you the clarity on how to take control of your finances through budgeting and be confident about it and be in better control.